Yeah, yesterday's price action was not very satisfactory, frankly. And if global cues would have not been strong and supportive, we could have
We would be discussing completely different things this morning.
Exactly. So now what you could do, if you take the leaf out from what the setup is, and if you look at all the ingredients in the melting pot, will we go with the global trend or are we likely to go against the global trend? The spillover effect of momentum is not there, and are we likely to find support at lower levels? My sense is that you need to be a buyer on bad days. Like, when you see a little bit of global panic, you near the nifty support levels, you just go below the support level, you want to be a buyer. But you do not want to chase stocks what you did, let's say November and December. That may not be a very gratifying experience.
Okay, perhaps that could be the strategy that you look to adopt as of now. And just to elaborate a little bit more on the global cues, yes, indeed, it was a healthy handover coming in. A lot of the tech-heavy stocks rallied. Nvidia, for instance, was at an all-time high. The Nasdaq jumped about 2.2%. And across the board, you did see a smart gain coming in for Wall Street. And this morning, it seems like the Asian markets as well have risen across the board, rebounding from yesterday's sell-off. You have a lot of macroeconomic data as well that will be anticipated. But that aside, then, let's also put the spotlight on the December AMFI data that has come out, and indicative of the fact that there have been strong inflows in small and mid caps, and 12 straight months, Nikunj, that you're seeing a robust trend coming in particular for the mid and small caps.
I used to always feel happy that SIPs are going higher, and that's like really been the hallmark of this bull market. So we're not saying anything. 17,000 crore on a gross basis, I think, is a very enviable number. And typically when you see markets giving you a appreciation on a daily basis, whether you're a retail or institutional investor, no one's going to sell. Now, where I would like to draw a red flag is, stay with this graphic. Flows into small cap funds in the December data, they are indicating that they were at 4,000 crores. So out of the 17,000 crore, 4,000 crore, that's what? Almost 20% of the flows have gone into small cap funds. Now, the data also seems to be indicating that money is moving out of debt and moving into equities. So, I don't want to make a case that you need to cancel your small cap SIPs, or you need to perhaps take a complete different approach when it comes to investing in the small cap and the mid cap funds. I'm using the word funds here consciously, not stocks. But somewhere I think risk management is required now, because if everybody is chasing small cap funds with the assumption that we would be in for a repeat of 2023 and 2024, I think you need to exercise some caution. So keep your expectations low. If this kind of a robustness into small and mid cap flows continues, then you really could be having a lot of money chasing few quality stocks. So I think AMCs now really need to take a call that is there margin of safety and is there value in small and mid cap stocks. If it is not, I think they should go out and take a call that okay, we should stop inflows into some of these schemes. Some schemes have started that, but I think the industry now really needs to take a holistic approach. You cannot have a situation where such flows come into small and mid cap stocks, and you actually have a situation where there are very few good stocks and a lot of money, and money is moving out of debt into small cap funds. So it's the flow of money which in a sense will ensure that the market valuation will go out of sync.